If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you. All right. I think just quickly before we dig into everything, just an acknowledgement that there are so many families, individuals that are still
from the hurricane
wondering where their loved ones are. You know, we're in Nashville, Tennessee, in the Southeast, which is where the brunt of the storms took place. And, you know, Nashville was spared, but we both lived through a flood in 2010. And so we know how devastating these things can be. And, you know, unfortunately, I think from a fatality perspective, this is far worse than what we experienced in Nashville in 2010. And so I just want to start by just saying that our thoughts are with everyone who is working to continue to try to sort of restore power and access and find loved ones and friends in that region across North Carolina, South Carolina, Georgia, and parts of Florida.
Yeah, that's right. It's sad. And floods happen really quickly and they're just devastating.
Yeah. So. Yeah. So nothing more to say. We have a lot to talk about. And so with that, we will dig in. Vic, I got to give it to you, man. 3-ish months ago, you walked in with a set of stories, and you had a story about the dock workers, and I was like, why are we covering the dock workers? And now I know why we were covering the dock workers. Holy cow. It doesn't look, it's not something I want to brag about being early on this, but it's the thing I love about doing this with you every week. Is we are spending time studying the world and not just healthcare.
We're not shocked on Tuesday when they go on strike like everyone else in the world.
Yeah. So anyway, I will tee it up to you. You've got a series of stories here. We're going to kind of run through these hopefully in rapid succession, but a lot has happened in this slowly building story over the last 90, 120 days.
Yeah, a lot has happened, and also management and the union are not talking. And so there's lots of media, and we have a clip of Harold Daggett, who is the leader of the union, and he is not going to back down, in my opinion. And he did a 17-minute interview last week, and he's very clear about his demands, and they're going to be difficult for the various companies to agree with. No automation, and a much higher raise. But he is credible to me that he's not going to back down. So we'll put a clip, we'll put a link to this, but I think it's worth watching pieces of it just because to hear his language, he is standing up for his members and not willing to have tracking cameras, tracking, things on the trucks, tracking them, or using technology to replace humans. And while I understand that, I think it also is, the economy is going to progress. We're going to have tools. And so there's just this tension. It's really the tension between the workers and ownership or shareholders at the end of the day. And it's a hard issue because these companies are not American companies. So I find it hard, even as a capitalist, I find it hard to not side with the emotion of the workers.
Yeah, look, this is the beginning, right? To me, this is the true beginning, right? The first honest conversation coming from organized workers who actually can impact our daily lives about what we all know is coming. Right? Like let's not, I get so sick.
It's not going to be limited to the port.
No. Right. Like I get so sick of being in this tech bubble where people talk about, oh yeah, of course there's going to be some job losses, but all these new jobs will be created and there's all this flourishing and blah, blah, blah. And it's like, okay, but what's the reality of that process that you're just sort of, Yeah,
you're waving your hand and say there'll be dislocation and we'll work it out.
Right.
And the difference this time is that if you look at the Industrial Revolution, or you look even at the internet, the AI tools have come up much faster.
Oh, gosh.
And it's going to cause a greater displacement of humans. It just is. And they have to be retrained, and it's not even clear what jobs will be available.
Yeah. So normally we sort of keep our AI to the end, but I think AI is going to be throughout this episode in multiple points. I reviewed the storyline. I mean, there's a lot of stories where AI is a focal point.
Yeah. So if you think the strike's going to be over soon, watch Harold on YouTube. New York Times did a really good story sort of describing, yes, there's some pay components. There's 1,000 media stories about the strike this week.
Right.
But we'll link to this one in the Times. They're really talking about the automation piece. And my view is that's the sticking point that they broke off talks about. They just can't come together. The hourly wages are an issue, but I think management's used to negotiating that.
Right.
And they can navigate that. The lack of any new automation is a really difficult point to negotiate.
I mean, look, just in the few minutes that I watched of Daggett's candid conversation as it's framed on the ILA YouTube page, the thing that struck me was it's not just automation. I mean, he's talking about how technology has progressively been added to the docks.
Yeah.
And he talks about the surveillance cameras that are everywhere, and basically says, listen, you can't even breathe on these things. Everywhere we go, we're being watched. Now, of course, it makes sense when you think about security and not just protecting against theft, but also all sorts of things being placed into boxes and
fentanyl sometimes is coming through the ports. There's lots of reasons to have technology
for sure. So I think it's less about should there be cameras and more about hearing his position on it and realizing, no, there's a much more fundamental cultural disdain for technology, period. This is not isolated to automation. Automation just represents the worst form of technology, but they've already been, in their view, enduring progressive additions of technology to their day in, day out working experience.
He goes back to the 1960s and documents every step along the way, how technology was brought in that improved throughput, improved more freight coming in, and reduced jobs and put pressure on his members. And he's right. I mean, it's clearly a scripted. I mean, someone fed him questions for the interview, but it was very prepared. So it was candid, but pretty prepared.
Yeah.
But there's a lot of truth to it.
Of course, there is a current sitting president, and while that president is not running for re-election, his vice president is running for election, and so therefore the incumbent is under pressure because it's happening on their watch.
Well, and he could force the union to go back to work. The president can impose a 90-day period where the union must go back to work in order to also have fruitful discussions.
Right.
And I think two things are interesting from the political point of view. One is that the Teamsters, for the first time, I think since the Teamsters have been involved in politics, which is 30, 40 years, did not endorse Harris. They didn't endorse either way. Either way. They have always backed the Democrat, and this year they didn't. And so for Biden to go against the unions and order them back to work, I think would worsen the percentage of votes that Harris got from the union area. So they're hesitant to do that. But at the same time, we're already seeing shortages in stores of produce and some paper goods. It's going to, he describes it. The automotive industry will be hit sort of in 15 days. He kind of goes through, Daggett knows exactly how it's going to flow. And then the further thing that makes it difficult is the union has said, fine, we'll go back to work, but we are not going to work very hard. And so I think the Democrats are kind of stuck. They could force them back, and they might have to, but it's going to be sort of either way is not good.
It's a bit of a lose-lose situation for them, for sure. Yeah. And so you got some additional links in here that we'll share, one from a profile on Daggett in the Wall Street Journal. We don't need to really go into that one as much, but some really great links here. So in Florida,
this afternoon, this was 3 hours ago. We're recording Thursday afternoon, around noon East Coast time. Governor DeSantis in Florida himself has brought in the Florida National Guard to open up the ports. Now, whether they have the ability as a guardsman to turn on this stuff and actually unload the ships, I don't know. But he is attempting to take action.
I bet they can. I bet they can figure it out.
I think they can figure out something. They won't be maybe as efficient, but I think they can figure out something.
That's right. Yeah. And look, just reading from his post on X here, it is unacceptable for the Biden-Harris administration to allow supply chain interruptions to hurt people who are reeling from a Category 4 hurricane. I mean,
it's hard to argue with that.
That's a pretty good point.
Yeah.
That's a pretty good point, right? From his perspective.
Yeah. He's governor of Florida. Florida was not as bad as North Carolina, but they had plenty of damage. They have a lot of issues there.
That's right. They don't need this on top of it.
Right.
So, yeah, I mean, just really crazy scenes in the last the last few days around this Dockworker situation.
Yeah, and I think it's going to. My belief is that the inflation won't be affected for the next print. So in the September inflation, of course we won't get it for another week or so.
Right, it's delayed.
But I think it's going to be too new to really affect that. But I think we are going to see inflation, really not related to the Fed cutting rates, but due to the dock worker shortage.
Yeah.
And so that's going to complicate the Fed's job around the whole thing.
All right, moving into healthcare. Healthcare hiring slows, raising concerns for the U.S. job market. So I was talking to Emily, and she said her and Tom have been watching the BLS data, and apparently they see some wage pressure starting to sort of creep back in. And so perhaps their data watch is also being reflected proactively on the slowdown of healthcare hiring.
Yeah, I think there's some debate on how much the hiring is slowing. Certainly this modern healthcare story, it was a very slow month of healthcare hiring. But I think we still have a lot of volume and high acuity patients coming in. So I don't know if this is a trend, although it was a concerning, pretty low number of hiring.
Yeah, I mean, volume is a totally different metric, right? And there was a deficiency of hiring, and then hiring sort of got stabilized, and they sort of got the labor thing back in order. And now we're kind of back to the wage pressure issue, which is maybe more just kind of normal healthcare challenges as opposed to just not having the workers in place at all.
Yeah, I think that's right.
And this article from Modern Healthcare is just sort of flagging that this could also reflect broader issues in the job market, since healthcare is really the number one employer in the country. Yeah. When you stitch it all together. All right, going to the corporate real estate storyline we cover. Chrysler building owner is poised to lose control of the iconic skyscraper. Wow, the Chrysler building.
This is maybe the one of the most famous buildings in America, and they cannot keep it because of the whole real estate. There's not a lot of tenants in it, and they can't keep up with the payments, so they're losing it.
Not much more to say other than keep your eyes on the corporate real estate shoe. I mean, this is one of those things where I think we need to keep tracking it, because there is still the potential for a nasty fallout in this space. We're not there yet, clearly, but I mean, this is not a good story. They missed $21 million in ground rent payments.
Yeah,
I mean, that's
right.
Not something you're going to easily make up. Okay, so moving into VC, the biggest opportunities for healthcare AI and the hurdles that stand in the way, Bessemer report. So we had Flair that did a report like 2 weeks ago on Medium, and now Bessemer is coming out with a report on healthcare AI.
Right. Yeah, and they did a good job with the report. It kind of goes back maybe 25 years and tracks the devices and also patents and FDA approvals. And, as you would expect, there was sort of a low but steady amount of AI or really machine learning or technology based that they're sort of with hindsight calling AI now.
Right.
And then it's gone not vertical, but exponential growth since the last 3 years. So they are covering in a slightly different way than Flare that I thought was interesting. And we know the Bessemer Venture Partners is a good group.
Yep. So just more venture firms sort of narrowing the focus in on healthcare and AI. Both Flare and Bessemer are good healthcare VCs, right? So not coming from outside of the space.
Yeah.
And then you've got a good look.
Yeah, we have a link to their actual model.
Yep. All right. Keep moving. All right. So now we're getting some VC deals. Rippl, RIPPL, announces $23 million Series A to expand virtual dementia care.
Yeah. So this is on the same trend that I've been seeing of kind of focused disease state virtual care. We had a MIDI, which was a women's health.
Yep.
Maybe last week. I think it was last week. So this is dementia care. Dementia care, I think, deserves its own service. It's very complex and hard to manage if you have a parent or loved one with dementia, and it's a pretty big space. And so, good to see them bring in a decent amount of money. They're expanding. They're already in place, but they're expanding geography.
The round was led by Kin Ventures, and they're based in Seattle, and other institutional investors from the round: Arch Ventures, General Catalyst, GV, which is Google Ventures, F Prime. So solid group of VCs around the table on this deal. All right. Next up, we've got. Okay, this is a Council Capital deal. So this is based in Nashville, not the company, but the VC firm.
Yeah.
And StrataPT secures $25 million for practice management software. So practice management, always a bit of a tricky business to get into unless you've got a soft market that you can enter. Mm-hmm. This is targeting StrataPT, the physical therapy space, and familiar name as the CEO, Paul Singh. So that's a blast from the past of our lives, Vic.
Yeah, I mean, he was a VC when we were starting.
Yep.
And then he's moved into being more of a operator.
Yeah, I mean, he's co-founder of 500 Startups with Dave McClure.
Right.
So I mean, that's
he was in a real significant VC seat, and then he decided to be a founder. Yep. This is maybe the second or third company he's done.
It feels like the third, maybe the second in healthcare.
Mm-hmm.
So he's been doing a lot of stuff in healthcare. Bootstrapped it up until now, and apparently Council Capital's taken a minority stake. So
and it's a focused physician practice management, really around physical therapy, occupational therapy. They may broaden, but that's where they're focused right now.
Yeah. Well, Paul's a good operator, and with the background as a VC, knows how to structure a deal. So I'm sure he did. I'm sure he structured this deal quite well for himself. $25 million at a minority stake tells you something about the valuation of the company. All right, so CRV does something that is rare in venture capital. They gave money back, and that is because they do not believe that at the growth stages there are sufficient opportunities to find good value at good prices and actually generate a return in terms of the surface area for exits. So they're returning $275 million that they have not yet invested from their $500 million select fund, which is designed to back mature startups. And instead, they're focusing on what? Early stage companies.
Right. Yeah. So a couple of things. Charles River Ventures is, one of the earliest venture firms in Boston on the Charles River. And the first generation of partners has retired, sailed off into the sunset. So this is CRV, which they can't call themselves Charles River Ventures anymore, I think, in that transition. But it's the second group of general partners. And they expanded into the growth stage, but it's always been an early stage specialist.
Yep.
And they're now getting out of that business.
I mean, look, the idea that they are returning the capital is outstanding. Yeah. But also, they wouldn't return the capital if they thought they could generate a return on it. Right. And so this is, to me, people talk about venture capital as if it's one thing. Mm-hmm. Right. And they say, venture's getting to be a really hard business, blah, 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 all this other kind of stuff. And it's like, it's not one thing, guys. Yeah. Yes, if you've been tracking this space, yes, growth, VC, super hard.
Yeah.
Really bad, right? Why? I kind of laugh at why it's so hard and why it's so bad, right? To me, it's bad because it was easier for some of these firms to just raise greater amounts of capital, collect larger fees, and wait upstream for all the hard work to be done by the early stage VCs and getting the companies ready. And then they just, take really strong positions in between early stage and private equity or IPO, right? But it's like, how much work were they really doing? Like, not that much work. And so what happened? It became a very crowded space where your only real advantage was capital.
Yeah.
And now there's not as many opportunities because the IPO market is way less active than it was 5 years ago. And the valuations were really inflated from the zero interest rate era. So
yeah, I think that's right. I mean, it was overcapitalized, and so there were many firms that didn't lead deals and kind of followed around other firms and just would throw money around and then hope for an IPO or a big exit. And the multiples have come down. The IPO markets are maybe they're creaking open, but they're not like they used to be.
Right.
And so you have to actually add value. And it is...
And take risk.
Yeah.
Take real risk.
Right. And many of those firms are not designed for that. And Charles River is pretty good. I think they're a good early stage investor. They're not giving money back on their early stage. They basically are abandoning the growth stage because they can't get the money to work in the risk return profile they want.
Yeah. And they're absolutely right. They're absolutely right about that. PE firm TPG buys majority stake in health information network Surescripts.
I think this is healthy. Surescripts is pretty dominant in the electronic prescription kind of processing space. They're 50% owned by Express Scripts, 50% by Caremark, which is CVS. Mm-hmm. And a 50-50 partnerships, it's very difficult to get anything done. And so I think this is good. It's gonna make it a more normal company. That CVS and Express Scripts, I'm sure, will have some piece, but TPG will drive, which is going to be healthy.
Yep, agree. This ownership structure is really funny. Half owned by the National Community of Pharmacy Association and the National Association of Chain Drugstores,
right.
And half owned by Express Scripts and CVS Caremark.
So
that's just
designed
dysfunctional.
to be dysfunctional.
Yeah, that's just dysfunctional, right? So I guess maybe they thought that ownership model would create Switzerland, but...
Well, I think they all contributed their electronic processing thing to make this dominant position.
Sure.
And then they had to let it sit for a couple of years before they were ready to sell it to someone else. Something like that.
I mean, I suppose, but I think there's the reality that there's the pharmacies and the drugstores on one side and then the PBMs on another side. And they are largely aligned, but, not always aligned.
Yeah.
So, having an independent financial actor as a majority owner of the company is probably the right thing for this business. Gosh, UPMC consistently in the news and not with the most favorable stuff. So, I mean, I just want to say, obviously, this is a large, important health system. And, when you have sort of a string of stories like this, you sort of hope, okay, well, hopefully the bad stuff's getting worked through and, better days are on the other side for this organization, maybe next year, because healthcare workers having a non-compete lawsuit and the Fed's backing them on this. I mean, again, just when we're talking about labor, it's just a labor-friendly environment right now, and labor is kind of consistently winning. Now, this is not necessarily about wages. This is, about non-competes, but I think generally speaking, non-competes are not that friendly politically. People generally don't appreciate them.
Right.
Business owners tend to think about them as being necessary to protect the value that you're putting into your employees. But the general public is not business owners, and so this is not a favorable thing politically. And you just don't want to constantly be in the news for sort of negative things, whether it be missing budget. I mean, they've had some big operating losses, and now having this situation where the feds are, backing their workers.
Yeah, and they have been accused, and the feds are supporting it, of kind of blacklisting doctors, where like you're not allowed to be hired back, and they really aggressive, and then forcing nurses to repay training costs, and almost not allowing people to move for a better career opportunity, in a way that's pretty seems pretty egregious. I don't know the details of it. So
Yeah. So, I mean, not much more to say there other than, like, hopefully we're getting to the end of the bad stories with UPMC. So there was a vice presidential debate this week. And I got to say, I watched about a half hour of it. You know, whatever. I mean, it was fine. I think it was nice to see them be relatively cordial towards each other.
Yeah.
So that was sort of
they
good.
actually had a pretty good discussion about various issues without name calling or mudslinging too much.
That's right. Yeah. That's right. I was on a group chat and there seemed to be very different opinions on sort of, you know, who was winning or who this was good for.
I don't know that vice president debates really affect the election that much. I mean, incrementally, maybe.
I'll give you my view on this one. I think you're generally right. I think in this case, Vance was really the lightning rod for the whole positioning that came from Tim Walz of these guys being weird. Right. Like you can say Donald Trump is weird, but I mean, that doesn't stick very well. But the JD Vance is weird thing that was sticking pretty well. Right. And I think my big takeaway from this, because I didn't think there was that much consequential in terms of what was being said. My big takeaway was that Vance is a polished, you know, Yale Law School. He's polished in that venue, and he did a good job of kind of offsetting that weird moniker, right? I mean, I think you can go back to other clips that you have of him online in different settings and things like that, and some of his positions on things, certainly. But, you know, in prime time on national broadcast television for more than an hour, he stood up there and he didn't sound very weird.
Right. Yeah. He did a good job sticking to the talking points that will poll well.
More disciplined than Trump.
Yeah, much more. So he came across as he's able to be an attack dog on a podcast or at a Trump rally, and he can certainly play that role. I've seen him play that role, but he clearly showed off that he can play the middle of the road, sound like a normal human being too.
Yeah.
And that's a skill.
Yeah, he can do the shapeshifter thing pretty good. I mean, I think his weak point appears to be actually being an everyman, like actually being in the general public. He seems to not do that well in those settings. But yeah, look, on the debate stage, I thought he presented well, regardless of what the words that he was actually saying. That's kind of irrelevant. It was, how did he come off?
Yeah. Right. And then Walz, I think he just is not as good as Kamala. So it was a really interesting thing. Of like,
that's right.
JD Vance was, I think, much better
than Trump.
I think, I mean, I think that he might have a better chance of actually winning the presidency than Trump. But Trump has all this momentum, and he's got a bunch of people that, you know, are always.
No, the Trump brand is. I mean, no, I disagree with that, but that's just because the Trump brand is a once in a generation brand. It's ridiculous.
Yeah. But Walz is clearly not as good as Kamala.
Yeah,
and so you could see the difference. It was not. It wasn't really a fair fight.
Yeah, so we've got a link here to a story in Fierce Health. We're talking about the key healthcare takeaways.
From a healthcare point of view, I don't think it matters.
I think it was benign. I mean, I don't think anything they said mattered.
I'm ready to get the election over with.
Likewise.
But I think we will navigate whether it is Republican or Democrat. I don't think there'll be a sweep where it's going to be divided government, I believe.
See, it seems like it's lining up that way.
I think the Senate's going to be Republican, and so...
But it also looks like the Republicans are going to lose the House.
Yes, that's what I think. Yeah.
Okay, so Gavin Newsom had a flood of AI bills coming into his office that he had to decide if he was going to sign or if he was going to veto.
Right.
And he vetoed the big one, the big overarching one.
The
because
big safety one was pretty nebulous and hard to define. Yeah. And he vetoed it, which he should have.
Yeah, over the top. But he did sign a couple of AI bills that were focused in healthcare.
Yeah. Yeah, there were 2 bills. I think he signed 17 bills related to AI.
Oh my gosh.
In September. And 2 of them directly are healthcare AI bills. One is if you use generative AI in emails or in chat messages or voice, you have to clearly disclose, and I think there's even requirements for multiple times to disclose so that the patient understands that it's not a human.
Right.
Which seems
Seems
reasonable.
Fair.
Yeah.
Seems fair.
And then there's a like you can't use it in fighting claims. I think that was the next one. So there was the automated tools for like prior auth and
well, it's not that you can't use it. There's all sorts of guardrails around avoiding bias.
How it's used.
How
right,
it's used.
right.
You need to avoid bias. You cannot make determinations based on age, gender, race, disability, things like that. So, starting to put some guardrails around how deterministic the AI can actually be in terms of the, what are the factors.
Yeah. Some of those, particularly age, you might be important in healthcare.
Yeah, but they're not saying you can't use that in your assessment of a claim. They're saying you can't use AI.
In AI.
Yeah, in an AI model, right? Boy, Humana, what a roller coaster they're going through. First, Q4 of last year, okay, everything's going to be bad this year. We're going to down rate. We need to re-rate our projected budget, et cetera, et cetera. Then the FTC, in court, the whole CMS STAR thing gets thrown out. So they back up. They get this allocation of capital, and now their STAR ratings for just them, not across the board, just Humana, have been dinged, and their stock slid 10% as they warn their 2026 payments can be impaired.
Yeah, so they're going to lose significant amount of bonus payments. I think they lost on average an entire STAR. They went from like 4.5 to 3.5. So it is very negative to the financial model. I mean, you need those STAR ratings to be positive. So I think there may be other payers that also have similar reductions.
Sure.
My view is that Humana kind of comes out with this earlier, and there might be other ones as well, but they took a big hit this week.
Boy, crazy scenes happening at CVS.
Yes.
So we've got activist investor pushing for big changes. We've got discussions via disclosure around the thoughts that CVS may break the business up. Mm-hmm. And how long has CVS Aetna been that merger? It's less than 10 years, right?
Oh yeah. It's five-ish years.
5 years. Yeah. So already discussions around potentially breaking it up. And the business is there, just to kind of do the bullet points. CVS, which is the retail brand, Caremark, the PBM,
right?
Aetna, the insurance business, and then do they have another big business?
Well, they
unit?
have. They bought One Medical. They bought Advanced Primary Care.
Oh,
company,
yeah.
Which has not performed well. I think it's
One Medical. No. One Medical was Amazon, right?
Okay, it's one. I can't remember which one it was. They bought
Oak Street?
one. Maybe it was Oak Street. Yeah.
Oak Street Health. Yeah.
It was a lot of money. Over $1 billion, and it has not performed well.
Yeah. And any other large business units that they have over there?
No, I think those. I mean, they do manufacture some product, some health span products, stuff like that. But that's part of the retail. I put that in part of the retail.
Okay. Yeah.
And when you think about those businesses, they're quite different, right? Like, there's
question.
a lot of argument that the strategies to grow and maximize the shareholder value of those businesses are not the same.
Well, I think it's when they put it all together at a macro 50,000 foot level, it sounds great, but healthcare is a really intricate, difficult business, and you got to get all the knobs and dials right in each business unit, right? Like, why does HCA perform so well? Because it's a hyper-focused business.
Yeah.
You know what I mean? It's not a confused business. It knows exactly who it is and what it is and what it's doing, right?
Yeah, and United Health Group has all of these. Well, they don't have the retail. They don't have retail.
They don't have the retail.
But they are really good at integrating and data sharing between the different groups.
But importantly, they do not have the retail footprint. And that's a whole nother thing, right? CVS is not just trying to deliver care; they're trying to sell bags of chips.
Right.
You know what I mean?
Yeah.
Like it's a pretty different business.
Yeah. Both CVS and Walgreens, I think the physical stores that were really valuable for a long time now are an anchor.
Albatross. Yeah, for sure. So we'll just continue to watch this, but lots of chatter going on around what the future of CVS is. Okay, so we've been tracking what's happening in the GLP space, and one storyline was that because there was a perceived shortage, the FDA said it's allowable for compounders to enter the market to make sure that they fill the gap of those shortages.
There is a lot of debate. I was talking to Emily about this. The shortage is no longer true. We don't have a shortage.
Yep.
And she thinks that there's going to be ways that a well-financed group like HIMSS will continue to say, well, there's shortages of some other component that they're using in their compounding.
But there is a progression here, right? Because they didn't do an enforcement action against the compounders, but they did do an alert talking about the safety issues because there was a rise in people going to the ER.
Yes.
Because they were ODing on these compounds, which they're not doing for Zepbound and Mounjaro, right?
Yeah, I haven't seen that. We haven't seen that.
We haven't seen that, and the FDA has not issued an alert about that.
Yes, that's right. The warning was only for the compound.
Yeah, so I guess what I'm just saying is they are clearly sort of moving in this direction, right? Where they're trying to build a case that the compounders are outside of the scope of the FDA, right? They already say that it's not FDA approved.
Yes, the compounding is not FDA approved. I don't think it's ever FDA approved.
Right.
And it is allowed for your patients.
Yeah.
If you need to compound something and you can't get manufactured drugs, I think for a public health reason. And so they are saying there's an alert that some of these compounding services are not safe. And then now they're coming out saying there is no shortage, which I think you are right is sort of laying the groundwork for future action.
I think they're building a case because I actually think there's quite a bit of risk to the FDA if they don't get out in front of this. You let a well-funded outfit like HIMSS play, but that just creates precedent for a bunch of not well-funded outfits to say, why can they play and I not play? And, you could potentially have a lot of dangerous stuff happening out here in the streets. And the FDA, rightly or wrongly, is going to get tagged of, what are you guys doing here? You're supposed to ensure these things are safe. So my sense is they're building towards actually doing some type of true, action that resembles an injunction. So I think they should. They're not jumping towards that, but they're building a case, and I think they're also trying to signal hey, listen, think twice about this because we're letting you know we're not really in favor of this, right? There's no other way to read.
Yeah, and I think there's our economy with drug discovery and patent law and the FDA approval. It doesn't work if you just can go compound a replacement.
That's right. That's right. Okay, here's a piece in the New York Times about how fentanyl drove a tsunami of death in America. We've talked about the street drug challenges in America. We've been talking about them for a while. This is a great visual article.
Yeah, right. So it really needs to be watched on YouTube. But for the people that aren't watching, the scary thing about fentanyl is that you can die very quickly.
Yes.
And unlike other heroin or Oxycontin or something else where it's much more of a slow, you certainly can die of it, but it's much more over time.
Right.
Fentanyl, it's difficult to understand what you have in your hand, and so it leads to many more mistaken overdoses.
Right.
What I thought was really interesting, I mean, go down to the next graphic. They have a New York Times does a good job with the graphics. They show in 2000 there were no deaths or very little deaths from fentanyl. Of course, didn't exist yet. And then you see it start to come in around 2010-ish, maybe a little later, 2012. And surprisingly, it comes in through the Northeast, through Maine, I think across the border of Maine, and then starts sort of progressing towards the west. And then later, it comes up through Mexico to Arizona and the Southwest. And so there's all of this noise around fentanyl coming in through the southern border, which I think certainly is true today.
True today.
But it also came through Canada.
Yeah.
And wherever it comes from, we need to try to stop it.
Yep. So if you're interested in learning more about sort of the progression over the last 2 decades of fentanyl and sort of how it comes in, this is a great article to review.
Right.
All right, our AI rundown. AI will drive broad deflation, Silicon Valley pioneer Vinod Khosla says. Vinod agrees with you. You and I have had conversations about deflation, and I've said that in the case where AI and automation or whatever is used to lower the cost of production in a market where availability is still limited, I think that availability will trump the lowering cost, and it's just going to increase margin. So we were talking about houses in this instance, and I was like, okay, if they lower the cost of the production of a house, I don't think that's necessary. If the output is a very high quality house in a great neighborhood, I don't think that's going to decrease the price of the house. That was sort of my position there. But what he's talking about is the price of expertise.
Yeah. And the services economy and everything related to that. And I can already see it. I mean, like the quality that I got out of AI, I need fewer interns. I need fewer consultants. And I think if you are a consultant, you can do 4 times as much work.
I mean, right now, we're still in the era of let's speak, I think, realistically.
Yeah.
We're still in the era of Gen AI being okay, but not that great.
Yeah.
Right. It's like, it's not nothing. It's certainly a usable work tool, but it's not like over the top great. Like you can't just put in a prompt and get like an unbelievable report that you can ship to the public. That's not real today. Right. Also, we're in the pre-agent world. I know there's a lot of people building agents, talking about agents, but like no one's deploying agents at scale that we can sort of point to yet.
No,
that's all building.
The first GPT-4 reasoning thing that could lead to agents is barely out in beta.
Right.
I don't even have access to it. I mean, you have to be on the inside with OpenAI or pay them a bunch of money to get it. But it's coming, I think, in the next 2 years, where you can have, like in our business, you could have an IP agent that helps us understand intellectual property strategies. And does this company have a good chance to get information patented? Are there other licenses that we should be aware of? That's just one example off my head of an agent that I could have in my computer that instead of hiring an IP law firm to go and look at this stuff, it would just look at every deal and give me a report.
That's right.
Now, that's not here. You're right. That's not here yet. But that's what Vinod's talking about, that the amount of these expertise, consulting services, tools that you could use for the marginal cost of compute time is going to be significant.
I think that's right.
Yeah.
I think that's right. And, of course, they say a new age of abundance can begin, but it's like
he's positioning it that way.
Yeah,
it's going to be disruptive,
devastating
before there's abundance.
Devastating.
Yeah,
it's gonna be devastating. OpenAI nearly doubles valuation to 157 billion in funding round. Apple ended up bailing, I think, based on the valuation, and they raised 6.6 billion.
Yeah, and I was not asked to invest, but I do not think this valuation is a good point to invest.
I'm going to make sure we include it. I listened to a fantastic podcast that gave me a lot of good scaffolding points, I would say, for evaluating AI over the next 45 to 60 days, because that's about as long as you can sort of hold on to any scaffolding in this space. But 20 VC, Harry Strebling, I like some of his episodes. Some of them like drive me nuts. But
I haven't heard it yet, but would you invest in this round?
I probably, that's a really good question. $157 billion valuation and $6 billion in the round. So let me tell you some numbers that actually made me think maybe I would invest in this. So OpenAI right now is burning $5 billion a year.
Yeah.
But they are going to generate $3.5 billion this year in top line revenue.
Yeah.
And as we've discussed, they are in healthcare. In fact, we know that they're
getting more in healthcare today.
They're getting more in healthcare than people have any idea.
Right.
And like burning. If you were to swap out the B with an M, right? Okay, I'm generating 3.5 million, but I'm burning 5 million. But what I'm introducing into the market is not like incremental. It's fully transformational and disruptive. I'd probably look at that and say, that's a pretty good proof point right now. Now a valuation of 57 billion. So, I mean, what is that? That's basically 50x on their current revenue. Mm-hmm. I think that's probably a decent valuation. I think I think a 50x on their current revenue is probably a good. That's probably a good. That's I'd take that bet.
Yeah. So we disagree. I haven't listened to the podcast, which I will, but my view is that OpenAI has the best product in the market, hands down, right now.
Yep.
But I don't think they'll be able to protect it in a 3-year view. There's too many open source models. Now I think Sam Altman's point would be, we have more users, we have more training data, we have more ability to grow, and we'll keep our lead. I just don't agree with that.
I guess what I think is that making the step change advancements in AI is gonna bifurcate from what open source models will provide. Like, they're going to provide two totally different things. Like, I think that what OpenAI is creating is going to be the equivalent of like differentiated hardware. That's truly unique in what its capabilities are, and it's something that you embed in the applications that need it at the highest level. There'll be a whole bunch of applications that don't need it.
Yeah.
And those applications will utilize whatever. They'll utilize, Llama, because Llama's certainly good enough. But I think where OpenAI is going, do I think basically here's the bet. Here's the bet. Do I think OpenAI can become a $1.5 trillion company?
Yeah.
Yes.
That gives you a 10x from here.
Yes, that's a 10x. Right. I absolutely think OpenAI can become a $1.5 trillion company. I didn't get to finish what I was saying about the podcast, which is Brett Taylor, who is on the board of OpenAI, who was the co-CEO of Salesforce, who was the CEO and founder of Quip, which Salesforce purchased for almost $1 billion.
Yeah.
Who was the CTO at Facebook and is currently starting a new business that's all about agents. Has about an hour-long podcast with Harry from 20VC. And I think Brett Taylor
is phenomenal. I haven't heard this podcast, but he's
easily
really
one of the smartest people in Silicon Valley. And his very pragmatic operator mindset points on this from a person who's on the board at OpenAI, I think are really important to listen to. So this is like an episode I'm trying, because a lot of people just don't know Brett Taylor. So, they may not know the guy's on the board of OpenAI. Like, this is the guy who Benioff pulled up a chair next to him and said, help me run Salesforce. I mean, serious player, and was an engineer too, like before he became an operator. So anyway, so
we'll link to that podcast, and this next story is why that's why I wouldn't invest. So NVIDIA just dropped their open source large language model, and it is competitive with OpenAI's model. It has the vision and voice, all the multimodal. It doesn't have reasoning. So that's where OpenAI is ahead. But I believe that reasoning is an architecture thing that open source projects will co-opt. Now, maybe they won't do it as well, but I just think they're competing against the open community in a way that's going to be hard to stay ahead of.
I mean, look.
But that might be wrong.
I mean, look. Here's an example. I am constantly shocked at how resilient and high performing Oracle has been.
Yeah.
Like, Oracle has no business being resilient and high performing as a software company with all the open source software that's out there, right? And yet they are, right? I think that's what I'm talking about. Like, the enterprise is going to want to buy OpenAI.
Yeah.
Full stop. They're not going to want Llama.
Yeah.
They're just not. But I do think it's cool. Well, I think it's interesting that NVIDIA is also rolling out their own AI models. I mean,
NVIDIA views themselves, I think, rightly, as competing against OpenAI and Google while they're also selling them.
That's right. I mean, they're going full stack.
Right.
They're going full stack. And I think it's going to be interesting to see whether or not NVIDIA really invests in the cloud.
Yeah.
In a true AI cloud offering, right? Because you got to think that that's the long-term opportunity for them, as opposed to just like constantly selling chips to other cloud providers, right? Because the other cloud providers are trying to create their own chips.
Right,
like it's at some point you're gonna have to have a full service layer.
Yeah,
that's not just transactional, right? And to me, this demonstrates their ambition in that regard, and they've got all the money in the world to do it.
Right. Yes.
Right. And final story, MIT spinoff Liquid debuts non-transformer AI models, and they're already state-of-the-art. So this is another topic that comes up briefly in the Brett Taylor podcast. So again, we'll put a link. You guys should listen to it. But Vic, thoughts on this?
This is over my head technically, but I wanted to highlight that really smart people are not stopping with the transformer architecture, and they're pushing the boundary of the next thing, which will be additive, right?
Yes.
Like, these things will be combined together. You use their liquid architecture in some use cases, you use a transformer in other use cases. You'll have this agent model, sort of additional layer, and it's maybe a little bit complex, but it also is really exciting to see the advancements continue.
Yep. I think this was an important story for you to pull out, so I wanted to kind of end on it because I think people don't understand that Transformer is a particular model of technology that all of our current Gen AI stuff is built upon. Actually created at Google. Yeah,
there was one insight created at Google that they just gave to the world for free, which has created. I mean, it's what the T is in GPT.
That's right.
And for 5 years, that was all anyone was focused on because it made such big advances. And so to me, it was really interesting to see that there's new innovations as well at MIT and I'm sure other places.
Yeah, well, there's going to be different ways that we're going to be able to scale AI.
Yeah.
One is energy. One is just load up a bunch of chips. Right. So there's these different, but one is like, what's the core underlying technology?
Yeah.
Right.
Yeah. This is cheaper to run, I think.
That would be the point, right? Is like, can you create a fundamentally cheaper, more compressed version of the technology that just changes the model, changes the business implications of it completely? And that could be incredibly disruptive to NVIDIA, right?
Yeah.
Now, of course, you could run it on this thing and maybe like you get all this additional power, but what if you start to commoditize the hardware that's actually needed to run these models at all, right? That's a crazy thing that everyone's got a weakness, and that could be a potential weakness here.
Yeah, and I think there might be. I mean, we might get to AGI and have new models that are inventing new ways to train themselves,
sure, of course,
and an ongoing thing. We also might get to the point where we don't have any more data to consume, and the models kind of get to diminishing returns, where you can put more powerful chips on there, and you can run it to more billions of parameters. But we have sucked in every data point that man has ever created. I haven't seen that the the AI's creating data sets on their own has really led to a lot of advancements. So the data access, just there's not enough. I think most models have already consumed the entire internet, except for places where they're barred and they can't get access. So I know, it'd just be interesting to see how it all evolves.
All right. So just a heads up, next week, we are not going to be coming with a roundup episode. Vic and I are headed down to the Country Music Hall of Fame for Nashville Healthcare Sessions, and we're going to be live there recording sessions with folks.
A bunch of really good people coming in town, or that are here already.
Yeah, so we're really excited about that. And instead of the normal roundup next week, you're going to kind of get a rollout of those interviews, and then we'll come back the following week, 2 weeks from now, and we'll try to compress 2 weeks of news into 1 week. But just want to give you that heads up. And as always, thanks for listening, and we'll see you on the next episode.
Yeah.